Are macro storm clouds forming over the markets? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Noelle Acheson, author of Crypto is Now Substack. Hi, Noelle. It's wonderful to have you back on.
Maggie, so great to be here with you. How are you today?
I'm doing okay. I'm doing okay. A little bit of a mixed day for markets with a lot of eyes focused on NVIDIA, which is going to be reporting earnings after the close any minute now, really. And obviously, that's going to have a big impact on technology, on AI related stocks. And it seems like there's a bit of nervousness setting in here. We did see the NASDAQ trading lower into that. And I lifted the macro clouds line intro right from one of your excellent Substack notes this week because it just seems so accurate. We had everyone so enthusiastic and everything rallying. And now maybe reality starting to sit in a little bit and people are looking at, some of the positives for sure, but also some of the things that are concerning them. So, let's start with one of them. And how are you feeling about equity valuations here, especially when we're looking at some of these big gainers like NVIDIA?
Nervous, to put in one word, nervous, because they're stretched. They're so stretched. To be fair, I've said this before and been wrong. The market has continued to rise, and it could well continue to go up from here because of the extent of the bullishness that you see pretty much everywhere. And let's face it, earnings have been doing pretty well in the third quarter. No idea what NVIDIA is going to come out with, but the earnings have been surprising to the upside, which means you can just imagine all the analysts now scrambling to revise their Q4s and their 2025 earnings estimates up, and that is going to boost valuations. But just putting it on pretty much any kind of multiple you want, price to sales, price to book, or even using the CAPE ratio, stocks are at historically high valuations right now. The last time they were up at these levels was 2020, and before that, 2000. So is this time different? And it's tempting to say, yes, of course it is. And it is. But at the same time, we've also all been burned by making that assumption before.
Yeah, it's just been so hard. And listen, there are a lot of factors here. Some of them, I saw a fantastic headline. There is, huge amounts of spending on AI, like over $13 billion. It was up massively. So we know some of it's fundamental. Some of it is just flows going in. I just got off a conversation with Mike Green. We're going to be releasing that later this week. And, he always talks about these passive flows and how they're really messing with the market. He thinks the market is broken because of it. And we talk a little bit about that in a slightly different way than he has before. So there's a lot going on, and it's sort of hard to figure out for sure. But it does feel like we're getting into pretty rarefied air here, and that's probably why you see some selling going into it. I just want to say hi to everybody in the chat. And Tommy Thornton's there. Hi, Tommy. I know you've been, I'm sure, thinking about these valuations and taking protection or taking some bets on it. If NVIDIA drops, by the way, folks, feel free to put it in the chat if you're seeing it, because I've got a lot of things open. And I just want to mention Christopher is also saying in all caps, much needed acknowledgement and kudos. When Noelle was last on, she predicted 100K Bitcoin. I was a serious doubter and took the under. Turns out she nailed it. Congrats. I
Thank you, Christopher. I
properly
appreciate it.
investigated. So we all like when we hold ourselves to account here. And it's not quite there now, as I checked 94, but clearly there's been a huge rally. We're going to get to all of that. But the valuations, Noelle, we do that. This is the interesting thing about where we're at. So it's rarefied. You're nervous. It seems overextended in so many of these stocks, yet the winners are winning. We know there's a bias at this time of year, to make sure you're loaded up with the winners. And there are a lot of animal spirits out there. That's the other side of the coin, right? There's a lot of enthusiasm about the economy.
Absolutely. It's kind of hard to be bearish with so much positive so much positive mood coming from expected deregulation, coming from expected economic growth. Those are positive forces generally for equities. And even if inflation comes back, which, we can get to that as well, even if it does, that still tends to be pretty good for earnings per share growth. And that's what's going to be driving the valuations. However, the adage, Mag, it's not necessarily what you buy, it's what you pay. And the question is, are these the right levels? Or do you wait for the correction? I agree with Michael Green that the market is pretty much broken because of the concentration at the top. We have never had this level of concentration at the top. That's why one of the many reasons why this time is different, and that can be a force for acceleration, as we have seen over the past 2 years, or it can be what drags the market down. And Nvidia, as we're about to see, will probably surprise to the upside. Again, I'm not an equity analyst, and nothing I say is investment advice. Certainly not an Nvidia expert, but it's been surprising to the upside so far. However, we are also starting to hear rumors about, well, not rumors, but actually, yes, they are seeing signs of some supply chain issues for Nvidia coming down the pipeline, and it's very concentrated in its client list. Its top clients, we could start to see some issues at its clients, which is going to affect demand. In other words, Nvidia is pretty much priced for perfection, and that's unrealistic, tends to not last very long. When the big companies turn down, then that could drag the whole market down unjustly. We also have the regulatory risk for Google and for Meta. We have supply chain issues looming for Apple, especially if tariffs get put on Chinese imports. And these add a layer of risk to the market, given its concentration that it otherwise wouldn't have.
Yeah. That's the problem. And some people are sitting and thinking, okay, then this is finally the time for small caps. We'll see the great rotation. But does that actually happen, or do you just see a sort of a larger loss of confidence? One place we are not seeing any loss of confidence is in crypto. Christopher mentioned the run we've seen. I know you cover this space well. You sit at the intersection of macro and crypto, which is such an interesting place right now. What do you make of what we've seen? Does it feel different this time?
Yes, very, very different. Obviously, not just because we're hitting all-time highs one after the other, but the mood flipped on November the 5th, on November 6th, I should say. The mood totally flipped. It was the strength of the result. It was a surprise to many, and that does make the likelihood of regulatory support, more official support, almost a shoo-in. I mean, even just replacing Gary Gensler as head of the SEC would itself be very good news. But now it looks like we're going to get authorization for banks to custody crypto. We're going to get support for other institutional services. We're going to get clarity on the status of the rest of the market. We could even see the ETH ETFs distribute staking awards, because the clarity will come through on what type of product that is. This is all very, very good news for crypto. And Bitcoin is the gateway asset. Bitcoin is the easy one to get approval for mainstream investors. Bitcoin is the most liquid, the highest market cap, the one with the widest range of on-ramps and the widest range of derivative products. So Bitcoin is the gateway, as it were, and we know that we're in the early phase still of this bull run, because Bitcoin dominance, the percentage that Bitcoin occupies of the whole market cap, the whole crypto market cap, Bitcoin dominance is still climbing. It is that eye-wateringly high level. 60% of crypto market cap is now Bitcoin. That shows that we're still early. When that turns, that's us moving into the next phase of the market, because the investors that felt safe with Bitcoin, it feels strange to say safe with Bitcoin in the same breath, but I think you know what I mean.
Yeah.
Everything's relative. Safe with Bitcoin, when they start to get more comfortable, they start to go out the risk curve and they start to swap Bitcoin out for some of the more more volatile assets. But yes, no, it's very different this time, Maggie. It's because of the regulatory thaw. We can also get into the macroeconomic backdrop, which is favorable for Bitcoin. And it's not just in the US, that is the largest market, but there are strong signs of growing adoption outside as well.
Yeah, that's so interesting. What about, what are the flows we're seeing? Does it seem like it's people who are using it? Is it institutional in nature? Does it seem like it's people who are using it to diversify their portfolio? Maybe they're uncomfortable with something like bonds, or is this people who are just looking to kind of 10x, looking for that risk asset? Do we have a sense of who's buying here?
The answer is yes to all of the above, which is very vague, I know. But it is largely institutional still. However, institutions often act on behalf of retail investors, so it's hard to distinguish. For instance, the ETFs are very big buyers, but a lot of that is from the retail market, and others as well do channel retail funds. But a lot of it, yes, it is institutional. There are signs that retail is coming back. One metric that I keep an eye on is, where is Coinbase in the App Store rankings? And it has climbed fast. Another metric I keep an eye on is how many people are searching for Bitcoin in Google. That's climbed a lot also. So, but for now, mainly institutional. Retail is coming in, and the institutional. To further drill down on your question, it's macro. We're seeing a lot of that. A lot of people, at the behest of BlackRock and others, are allocating to the digital equivalent of gold. But there are, of course, always going to be traders that are just looking for the volatility. And what's unusual now is we're seeing many companies take treasury positions of Bitcoin, companies that are buying Bitcoin to hold on their balance sheet, obviously following the example of MicroStrategy, which is on an absolute tear this week. But those holdings are worth keeping an eye on, because here we have, along with some of the other macro portfolios, investors that are planning to buy Bitcoin and just hold it. Now, one thing is a lot of people buying Bitcoin with the intention of flipping it when it goes up a certain amount, getting that vol that
Mm-hmm.
you mentioned. And different thing entirely is when you have Bitcoin holders just sitting on it. That takes supply out of the market. That means
Mm.
there's less available supply to new investors coming in afterwards. It shrinks the supply, it increases the volatility, and it does enhance the potential upside for those that are getting in now.
So interesting. Yeah, it's been fascinating to watch that. We have some specific questions about that. I'll get I'll get back to it in a second. I'm laughing in the chat, and Ralph, I always think about this. He said that he prefers self-directed investor. Retail is pejorative. I think so too. I always trying
Yes.
to find another word. I don't think anybody
Yeah.
will know what I'm talking about if I say self-directed investor.
Too
And
many
someone else just
syllables,
said that
but
they're a
that,
degenerate gambler.
yeah,
So we've
yeah,
got
you're
them
totally
all.
right.
We got all types in the chat, which I love. I want to ask you, Noelle, about the dollar before we dig into some of the more specific questions on crypto. Uh, the dollar has been strong. We know that comes with risks to other countries and can create pain around the world. The now famous, phrase, the dollar wrecking ball. What are you looking at when it comes to the US dollar? And I guess maybe it depends on, what happens with rates as well. What is your expectation for the US dollar, and does the strength concern you?
The strength concerns me a lot. I mean, seriously, if you listen carefully, you can just hear emerging markets scream in pain, those, especially those that are holding dollar denominated debt. This is getting very expensive, especially taking into account many of them are also paying for their commodities in dollars. It's getting painful. But even stepping back beyond the emerging economy burden that they have to carry, this is hurting currencies everywhere, because it is the rates expectations is what I'm keeping an eye on. And we're seeing a revaluation of the expected number of rate cuts in 2025. You and I have talked about this before. I've been skeptical that we'd get half of what the market was pricing in at one stage. And indeed, the market is walking that back. And I think we do have some more adjustment ahead. It's close to being fair now, I think, but there's still some disappointment ahead. But the problem, Maggie, the problem is, if the US isn't lowering its rates as much as was once thought, and the dollar is still high, then that means that other nations can't lower their rates, even though they may desperately need to. And
Mm.
of course, I'm thinking of Europe, where I happen to live. Europe does need to continue cutting because growth here is dire. But if it does, then that's going to hurt the currency even more, which makes the growth even more of a problem. And you can see the beginnings of a downward spiral here, which is not going to end happily for anyone. What would make the dollar turn? It could, and the big investment houses are expecting it to continue to go higher, which is absolutely terrifying. I don't think that's correct. I don't see it going higher, much higher from here, or staying this high for much longer, because really all it would take, Maggie, is one default, one sovereign default. And that is going to throw a spanner into the works of global finance. And that is perhaps going to add some jitters to the dollar market. Of course, the counterpoint is maybe people rush into dollars because it's the safe currency. I think gold is probably more likely to be a beneficiary, Bitcoin as well. When there's uncertainty in the waters, those are the assets that tend to do better. So it also needs to come down for the reasons that we've talked about, not just to save many emerging economies and save corporate holders of dollar-based debt, but also to allow other countries to lower their interest rates, to
Yeah.
kickstart their growth again, and to get some sort of spread it more evenly, not fairly, more evenly around the world. It does need to come down, and even the newly elected administration have been muttering about the dollar is too high.
Mm. Yeah, this is what makes it really interesting, isn't it? Because you'd imagine at times of stress like this, And you're right. If it causes some sort of break in the financial system, that's problematic.
Yeah.
But you would imagine these are the times when central bankers talk, treasury secretaries talk, but it's hitting at a time when we're in transition. So that's very interesting and tricky. We don't even know who the next treasury secretary will be yet.
No, and we
So
don't know what the tariffs are going to be like yet. There's a lot up in the air, and it's all very, very relevant. At the same time, as you have a rewiring of global alliances going on under the table, and we don't yet know what that's going to end up looking like. But tying this into what we're seeing in markets, we understand why it's good for equities. What is very strange is to see Bitcoin on a tear when the dollar is climbing. Normally, they move inversely because a high dollar tends to be pretty bad for non-yielding dollar-based commodities. That's one of the reasons we've seen gold pull back over the past few days. Bitcoin, not. That is very interesting. That tells me that the other narratives, the non-macro related narratives for Bitcoin, have taken over. And it does open the question of what the force will be, what the tailwinds for Bitcoin will be when the dollar does eventually turn.
there was this interesting question that came up about whether the U.S. would consider some sort of Bitcoin strategic reserve. I mean, we've had all sorts of threads in speculation in the wake of the new administration and some of the people who seem to be in the inner circle. Does that seem at all realistic to you?
No, it doesn't. I mean, obviously, it'd be wonderful. Bitcoin would tear even more. But no, to be honest, it really doesn't. One, because it's expensive. And the more they talk about it, the more expensive it's going to get. And let's face it, there's a lot of other things that the United States government is going to want to be spending on. Now, that said, the proposal is that it is funded through conversion of the gold certificates. But here's my question. I would bet anything that the new Congress, one, doesn't understand Bitcoin, and well, most of them, and two, doesn't really understand the situation with the gold certificates either. So getting the enough approval for this will be a stretch, and there's just a lot of other things the new Congress is going to want to tackle when they get to work in January. I do think we're going to get a stablecoin bill. I do think we're going to get a crypto bill. I think this might be a bit of a stretch, and there's no sign that Trump is behind the idea. He hasn't actually officially said so yet. He has said that he is willing to make sure the United States does not sell its Bitcoin stash. That already, just by de facto, creates a small Bitcoin strategic reserve, much smaller. It doesn't have to do anything. That would be good news because that removes sell pressure from the market. But this doesn't sound particularly America first, because basically they'd be pumping the price of an asset that equally benefits some non-friendly nations, equally benefits investors in other areas, and equally benefits holders in Russia, Iran, Venezuela, etc. So I can't see him throwing his full support against behind this when there's going to be so many other America first things that he's going to want to get done.
Yeah, that's an excellent point. We would be remiss not to mention the geopolitical risk that tensions that are rising just in the last few days. Uh, is this something again hard to game this out because we have a new administration coming in? But is the market overly complacent about geopolitical risks?
Yes, has been for a very, very long time. You and I've talked about this before. And I get it. I mean, in a way, there's just so much to deal with. So we'll just deal with what we can understand. And the big unknowns are very hard to get our heads around. But with US made missiles and with UK parts being launched into Russian territory and the nuclear policy that Russia has just signed, yes, I would say things are pretty risky. I personally don't see us getting to the brink of another physical world war beyond, in other words, escalating it beyond the ongoing hotspots. But uncertainty for sure. And I think that's one of the reasons gold did actually have a bit of an uptick over the past couple of days after a couple of weeks of decline given the strong dollar. It's a risk, and we are going to see gold especially with tariffs, especially with some saber rattling from the new administration. We are going to see demand for gold continue to increase around the world, and Bitcoin as well, especially from emerging economies that A, already have some, and B, are looking to exploit their natural resources.
Mm. Ralph is asking, what do you think is going on with ETH?
Not a lot, Alf. Not a lot yet, I should say. ETH has been overlooked in favor of Bitcoin, partly because of what we were talking about earlier, partly because Bitcoin is the gateway asset, is what you start with. And this is a lot of the investors coming into into crypto now are first timers. Bitcoin is what you start with.
Mm.
And Bitcoin has an easy narrative now. It's a very different story from ETH, very, very different. But digital gold is fairly easy to get your head around, or even just a volatility play, fairly easy to get your head around. Whereas a global computing platform that is building an ecosystem, it's kind of harder. It's easy for some finance people to get ETH because yield. I understand yield, I can do yield. But on the whole, ETH does have not quite the clarity of story that Bitcoin does. Also, there is the institutional angle. The ETH spot ETF, as we talked about before, it's not a great product. You don't get the yield from staking. It does not distribute staking rewards. So the institutions would have to really be able to justify sacrificing that for their clients. That is dampening the institutional demand. However, again, with the regulatory thaw, that is likely to change. And when the market gets comfortable enough with the idea of crypto, we are going to see some rotation into ETH. So ETH is not doing much at the moment. But again, that's a for now situation.
Mm. Uh, we've had some developments with options as well, right? Approval, or they're finally launching. I suppose they're approved before. Is that going to make a difference? Bitcoin ETF options?
It does. It's a market infrastructure thing, really wonky, but I get excited about this kind of thing. It deepens the market. Yesterday, options on IBIT launched. The first time that options on the Bitcoin spot ETFs launched. Today, they were joined by options on the Bitwise spot ETF fund. And I think there may have been one other. I'm not too sure about that. But the big deal here is it deepens the market for IBIT, and it opens the door to more sophisticated trading strategies for any type of investor. And there's a bit of a conceptual leap here. These are options on IBIT, not on Bitcoin, but it's sort of the same thing, really, because they trade in parity, and BlackRock doesn't have a lot of counterparty risk. The only thing is, these don't trade on weekends, whereas options on Bitcoin would. However, if you're okay with that, these are a very interesting tool, because not only do you have options now available in the United States on a regulated exchange on NASDAQ, for retail investors and a wide range of institutions as well. That has not existed in the United States so far. So you've suddenly got a deeper sophistication in trading strategies for any kind of investor. That is going to increase demand. And it makes life easier for market makers, because now it is cheaper for them to hedge their positions. Market makers don't really take directional risk. They like to hedge. They can now do so more cheaply. That means that we are likely to get bigger market makers in, and that is going to increase the liquidity and depth and lower the volatility of the market as a whole. So yes, it's a very big deal. And their first day of trading yesterday, it was a blowout. They did really, really well.
Which I'm sure all the folks behind that are very excited about. And, liquidity matters in these. We have NVIDIA earnings out, by the way. And, it really, the important thing is going to be what they say about the future. But it looks like they beat on both earnings and estimate. But again, I think it's really that guidance they're giving anymore that is going to determine things. So we'll have to wait and hang tight. But they're only down very, very fractionally, and it looks like it's kind of been moving closer to flat or positive as those numbers get circulated. So we'll continue to watch for that. We haven't talked about bonds at all. Somebody mentioned that there was a lousy 20-year auction today, but so many of the people I've been talking about in the macro space, Noelle, are very concerned about the bond market. It's been volatile. We've seen it behaving it's been pretty steady, but ever since the Fed meeting, regardless of the rate cut, it's just been kind of hanging around that 4.5 level. It hasn't really responded to the Fed rate cuts, and there seems to be a lot of concern about rates going back up again.
Yeah, I'm certainly worried. I expect that. I'm not even worried about that. I expect that. I'm discounting that. And why? Because the expectation of inflation coming back is starting to consolidate. It's not just the tariffs, it's not just the tax cuts, it's also the deportation plans. When you constrict the workforce, wages are going to go up, and we know what that does. There's not much mystery there. So if inflation is going up, then we are going to be seeing fewer rate cuts. And it's not even just that. I'm fascinated to see today, I think it was, Michelle Bowman started talking about a higher neutral rate. And we had Laurie Logan mention this, I think it was a week ago, maybe it was 2 weeks ago. But we're seeing Fed officials start to fret about the neutral rate. And Fed policy, as I'm sure you already know, it's restrictive only as long as the Fed funds rate is above neutral. And everyone has been assuming that neutral is where it has been, pretty close to zero. And that's a very why are we assuming that? There's no indication that neutral has not moved. Neutral rate tends to move along with the balance of saving and spending, and that has been heading up. We actually even had Laurie Logan drop the hint that maybe Fed funds at this level are not restrictive at all. In other words, neutral rate may be up at where Fed funds are today, which means no more rate cuts are coming. I don't think it's quite that drastic, the move yet, but this is something that we're starting to hear Fed officials fret about, which means it's going to be talked about at the next FOMC meeting, which means we could be getting fewer rate cuts going forward as the Fed waits to see where neutral could be. And Powell has often, one of my favorite phrases of his is when he talks about where neutral is, it's no one ever knows, you'll know it by its works. I don't know what that means, but it sounds kind of cool.
Yeah, it means we have no idea either. And I'm
Exactly.
trying to
They'll
say as
know it
little
when
as possible so I
yeah.
don't get fired.
Yes, they'll know it when they see it in the rear view mirror, which makes the job obviously very hard. But if you were the chair of the Federal Reserve or an official, you'd probably be voting for caution at this stage, because having to wrap up rates because you got it wrong would be the kind of thing that the history books will remember a whole lot more than what a good job you did in the previous year.
Yeah, well, of course, right? And they talked a lot about that. Do One of the things you pointed out as a positive in your notes this week, though, is sort of the sentiment. I mean, it seems odd, but sentiment in itself can become self-fulfilling, and people seem like they're very optimistic about what's coming, especially with the economy. I mean, there's a feeling that the new administration is going to just unleash all kinds of economic growth.
Yes, and America first, and get some order back in the world, kind of thing. Yeah, I get that. It is hard to not catch to experience the contagion of the good mood. But Maggie, we've been here before. What is it like before the peak of every single bull run? It feels like this. Now, this doesn't mean we're going to have the turn tomorrow. It could be sometime next year even. But we've been here before. This particular feeling is not different. And it's worth following, and I'm sure many of your viewers do this. When there is consensus, then that's when you start to take off positions. When the most crowded trade is, let's just go long equities, that's when you start to wonder, maybe this has gone a bit far. But career risk is also something that many of the institutional investors have to think about. There's more career risk in getting out too early than in getting out too late.
That's especially as we head into year end, that seasonal bias. You don't want to be holding those losers. It's so interesting because that seems, do you see a divergence between, because normally when we're saying that, so get more cautious, protect yourself a bit, take some of your profits, be careful, things may be peaking. That seems like it makes sense in equities. It used to be that crypto was that risk asset too. So sort of the same applied. Is that true, or is that seem like it's a different point in a cycle? Is that operating on its own cycle now?
It's operating on its own cycle now. It always has, actually. I mean, there are many times, as we've spoken about before, where Bitcoin does follow macro sentiment. But then when the cycle gets going, happened to the last one, happening in this one for sure, there are different narratives in play. As I mentioned earlier, Bitcoin seems to have decoupled from the macro indicators that normally influence its performance. Because we have a higher dollar, we have a reduction, a lowering of rate cut expectations, and that normally be bad. No, Bitcoin's on a tear for unrelated reasons. Now, there's also some parenthesis here. There is obviously some macro considerations in the Bitcoin thesis at the moment. If you think inflation is going to be coming back, and if you think there's going to be a lot of money printing to finance the spending bills coming, then that is another reason to hold gold or its digital equivalent. But on the whole, it's on a different tear now, which is why I mentioned earlier it's worth looking at the retail interest indicators. When retail is piling in, when things are really frothy, then that is a sign you're near the top, as with equities. When retail is piling in, when self-directed investors are piling in, then you know that you could well start to be, it's starting to approach the top, but it still can run some ways when that shift happens.
I love that. Well, Ralph has started a trend. Who knows? We may hang on
I'm
to it.
liking it.
Even
Self-directed investors. I
I
like it.
like it
As
too.
one myself, I like it.
I like it. Ralph said he was just joking, but I think he's onto something. Noelle, it's always such a pleasure to catch up with you. It's such an important spot that you sit in with your research, being able to have a lens on both the macro and crypto, because we are, especially with this new administration, just seeing this so much activity at that intersection. So appreciate your bringing your wicked knowledge of both to us all the time, and it's been so helpful reading your Substack. So I really appreciate you.
Oh, thank you so much, Maggie. It's so great that you cover the whole range of markets. I don't think there's any area that you don't fearlessly march into. I think
I
that's a great.
we try, right?
That's
We
yeah,
have
no,
to. We have to
seriously.
all look further afield, I think, to make any money these days. So we're trying to, turn over all those stones.
And it
We
is
put a
also
link for you all.
interesting. It's also
Yeah,
interesting,
it
isn't
is.
it?
It is a really, and we've had a lot of people say that. And by the way, a lot of people that have been on, and Vincent just sort of did that in real time with us on Monday, are kind of like looking at things and saying, "Oh, I think I'm changing my mind." I mean, Vincent has had a certain view for about 2 or 3 years, and he's sort of shifting it in real time right now because there are so many cross currents that folks are looking at. It does seem like we're at a really pivotal juncture, so it's super important to look across everything. I just wanted to say that if you don't already follow or subscribe to Noelle's Substack, you can find a link in our description. We will put it there for you. And Ringo put a poll in: Are you bullish or bearish the dollar? And 68% of you said you are bullish. So hang on, rest of the world. We'll see what implications that has. But anyway, great to be with you all today. Thank you so much. And we will be back with Singing Coach Dale on Friday. So get your questions ready with the levels you're watching, because he looks at all assets too. And I'm sure he has an opinion about the dollar. So we'll cover it all on Friday. Thanks, everybody.
Thanks,
Thanks,
everyone.
Noelle. See you soon.
Bye, Maggie. Thanks.